Hello traders, Gary Wagner here just before 10:40 in Honolulu, 3:40 in New York on Monday, 21st day of March 2016, and this is the Daily Report for Gold and Silver. We do have a mixed bag in the precious metals today, with gold trading lower on the day. Silver and platinum are trading higher on the day. First to gold, currently trading at about $12.43, $12.44, puts it off about $11 on the day. The low today has been $12.40 and the high has been $12.56. So as you can see, we're much closer to the low than the high. Now, oddly enough, we do have silver tracking higher today, up about 0.25% at 1581, and platinum also trading higher on the day, up 1 1/3% at 983. So traders, no doubt, an interesting start to the week, more selling pressure in gold. And interestingly enough, we had 3 Fed presidents come out within the last couple of days alluding to or hinting to the fact that we'll probably see a 1/4 point rate hike come April. Now, we had Esther George out of Kansas City. She's recommending a 1/4% rate hike. Atlanta Fed President Dennis Lockhart also recommending a raise, and James Bullard from St. Louis. All 3 of them stating that they believe that it might be time to actually ratchet up the pace in which we are raising interest rates. Now, that coupled with the fact that we have had the dollar trading a little bit stronger on the day, accounting for part of this decline that we're seeing, we do have gold under pressure currently at $12.44. Now, as you know, we are flat in the market, and we're trying to figure out at what point we'll see some sort of finalization of this consolidation that we've seen in the market ever since it hit this high up at about $12.86. Now, my sense right now, we talked about the fact that we are probably in some sort of a correction, and the fact that we're trading at 45 after being as high as 86 is indicative of that fact. But what I'm thinking right now, I've kind of changed our Elliott wave count. I'm still looking at waves 1, 2, 3, and 4 the same, 5 the same, but I'm looking at what I formerly was labeling as an A, a B, and a C, although it could still, it is an A, B, and C. It's all part and parcel of a sub count A, because I feel that in terms of the amount of time that we have seen transpire, it's simply not enough time for even these short cycles here. So with that in mind, we could see something like our A, our B, as I said, our C, which will probably take us to about 1230. It could take us lower, and if it does take us lower, I would look for a matchup somewhere above 1200, maybe 1210 in that area, and that could all be an A. And then we're going to get our B, which is going to take us, depending on where this market actually finds these lows, will take us once again 50 to 75% that of that move that we saw in this 1, 2, 3, which all together equal an A. So as we sit, my sense right now is that when we get some sort of technical confirmation that we have in fact found some sort of support in the market, and even if it's a B wave, it will be a good long side play for us. I think that we'll see that over the next couple of days. The other thing is that I do want to take a look at silver. Traders, because silver has made quite a dynamic recovery when you consider that just back about, the beginning of February, we were still trading at $14 an ounce. We are now up to $15.81, $15.79 on the Heikin Ashi. We do have a fairly strong body size over the last 3 trading days. We are looking at a daily chart, and so it's absolutely something that we want to look at. The real question is what will we see prices do as they approach this $16 mark again, which I consider to be our next level of resistance in silver. But nonetheless, it certainly warrants us taking a look at this market, especially since there has been such an uncoupling between gold prices and silver prices. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review.